Hello and welcome to Pro Trader Strategies Market Commentary for Monday, April the 3rd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've got a lot of economic data coming out in the form of PMI across the pond and here in the United States. Across the pond, we got Spanish manufacturing PMI came in slightly lower than expected at 53.9. Italian manufacturing beat the street, coming in at 55.7. The Swiss manufacturing PMI came in at 58.6, higher than the expected 58.2. And then we also got German final manufacturing PMI coming in line with expectations at 58.3. We also got Great Britain's manufacturing PMI came in slightly lower than expected at 54.2. It's expected to be 55.1. European unemployment rate unchanged, basically at 9.5, which is what was expected to be. Actually, slightly lower than last month's reading, but in line with expectations. Then we got our final manufacturing PMI here in the United States came in at 53.3, was expected to be 53.5, and the Institute for Supply Management, the ISM manufacturing PMI, came in at 57.2. 57.2 was what was expected. One thing to keep in mind, anything above 50 with these PMI numbers is expansion. Anything below 50 would be contraction. Not seeing any contraction whatsoever across all of these PMI numbers. Then we also got the ISM manufacturing prices paid coming in at 70.5. Was expected to be 68.5. One of the quotes coming out of that was that we are seeing input inflation or materials inflation in a lot of these sectors. Now, one thing to keep in mind with that is that we need to see also growth in the salaries and things of that nature, so that we can actually, that those manufacturers can offset some of that increase in prices. So we need to see that the unemployment is starting to really work, and that salary wage inflation is going up as well to kind of compensate for that. So keep your eyes out for that going forward. We also have Dudley speaking later on today, and Harker also. So don't really think that they're going to say a whole lot, but just to keep those in mind. And then throughout the day, we're going to be seeing a lot of vehicle sales coming out. Just give us an idea as to what these manufacturers are of autos, how well they're doing. One thing also along that line is Tesla now has a larger market cap than Ford. Ford sold 3.6 million units last year. Tesla sold about 76,000 units. So bizarro world that a company like Tesla has a larger market cap than somebody like Ford, who is the behemoth in the room, and Tesla paling in comparison on their sales and even their margins for that matter. So that's what we're living in a life of Snapchat, where Snapchat says they've never made money, they aren't making money, and they don't ever really foresee themselves making money, being able to IPO and have a nice run. But anyway, that is what it is. That's the way the markets work these days. Can't always really put numbers to the valuations of these companies, which is a perfect example of Ford to Tesla. Then on to the overall markets. Need to pull these up. All right, and on to the overall markets. We have crude oil right here, as you can see, down about 36 cents on the day. We did blast above that 23 Fibonacci level and settled above there on Friday. Today we are seeing it pull back and back below that area, that line in the sand. I didn't really foresee us getting above there. But now that we're back below there, I'm a little bit more happy with this. we're going to continue to see this, I think, continue to go down. My target for it is to go down here to about the 45.80 level. That's where I think it really needs to go to, just with the amount of oil that's out there. But needless to say, the market can push these markets out of line, just as Tesla and Ford in a sense. So it isn't always necessarily supply demand necessarily with some of these commodities. We can see the market really get pushed out of line, despite the fact that we may have record amounts of supply and slacking demand. The market could be pushed with some of these heavier funds, like rotating sectors and things of that nature. On to gold, it's up a little bit on the day as we have a bit of a mixed bag across the board. Gold pushing higher as some of these economic points, despite the fact that they're better than expected, the markets are starting to pull back in some of the equities, and bonds reacting opposite. As the equities come off, bonds are going to push higher, just as there's a flight to quality. The bonds up almost about 1.5 points right now, to trading 152.05 right now. Dow Jones Industrial Average, now that it's below that 9-day moving average, we're really starting to see it kind of slack off or kind of roll over. Should go down possibly and test that 50-day moving average today. That's going to act as support, just as the 9-day has in the past, and we've seen this 50-day hold up as support last week. So I'm going to look for it to go down there and test. If it gets below and settles below that 50-day moving average, it is going to look a lot more bearish. NASDAQ this morning got basically off the economic data points, a new historical high again, and then the overall markets have started to roll over, with the NASDAQ down about 15 points on the day. E-mini S&Ps down quite nicely, or I guess depends on whose perspective it is. I'm negative short deltas, but down quite a bit today after that economic data points, and the market's continuing to move to the downside. We'll look on the 30-minute chart and see how this all falls into line. As you can see, overnight session was really trying to push higher, but as soon as we got those economic data points, the overall market just slumped and traded down near their lows in this last 15 minutes. This is a 30-minute chart of the E-mini S&Ps on a 10-day expansion. So E-mini S&Ps breaking below this 10-day, actually it's a 20-day expansion. So this is where the most time of volume, or most time has been spent. Now we're below that time value area low volume node. So anything below there starts to accelerate the bearishness. All right, so on to a few trades that I've done. We had XLK up earlier, and this trade, with the overall market starting to slump, I started seeing the retails and technology looking to lead the way to the downside. So I decided to add some short deltas in my portfolio with XLK and went in there. It's got low implied volatility pretty much, but if we start seeing this slump off, then we're going to start seeing implied volatility expand in that nature. So I decided to go into the May and bought the 89 puts and then sold the 86 puts to help finance some of that extrinsic value, just like I talk about in these webinars about how to build out a proper long put or long call spread. So in that, I paid $1.18 for that spread. So it's right in line with my expectations on the debit paid for the width in regards to relationship with the width of those wings. So $3 wide, something less than $1.50 makes that work out quite nicely. Then we have XRT pushing down. I started seeing some of these other ones. This is one of the trades that I was looking on for the pairs trade, but with today's movement to the downside and a lot of these retailers decided to just start going with a short bias assumption, and with XRT it has pretty decent implied volatility, so I went in there and sold some May 43 calls in there for 52 cents. Got a little aggressive on that, but with the market coming off quite rapidly and some of the inputs, some of the stocks that go into this ETF look like a was a pretty good opportunity to take advantage of some downside in there. The other thing I was looking at and chasing this, trying to put on a put spread for WYNN, it just gapped out and above this morning, as you can see this, and that's usually from the trader's perspective. Anytime you see that massive gap to the upside creates a new high, if it were to kind of stay where I was looking to implement this strategy, it would have been called a shooting star, which means on the floor we used to say that was when they kind of blew their brains out and kind of there was going to be no more movement to the upside. As you can see, we got this long, thin wick here on the profile as well as the candle. So that has a tendency to show that there's not any real participation up there. The buyers have left the room and the sellers will push this market to the downside, which was what I was looking to do with a put spread in there. Just can't get inside of my rules on that, which was looking about a $20 wide put spread. Would want to collect or pay less than $10 for it, but it was trading somewhere $11.60 or something. So I just put an order in there resting. The overall market's come off, so it's just not going to happen now. That's all I've got for you guys today. Stay tuned for this next series coming up for the next like 3-4 weeks. We're going to be talking about earnings trades because yes, we're back into the earnings season. We've got a lot of stocks that are going to be able to fit in line with some of these rules. We're going to be taking advantage of that volatility crush coming out of those markets after those binary events. So this should be a really good one. I know a lot of you guys have been asking for some of these trades for earnings, and it just is ripe for the timing, and hopefully you guys can take something away from this and make some money in the earnings season. All right, that's all I got for you guys today. If you can't take that, take it easy.